Let's take a look at how to apply the techniques that we've learned so far to an actual trade example. So I pulled up a chart of Western Digital Corporation, ticker symbol WDC, and what I've done is I've mapped out the key support and resistance levels. And this is one of the first steps I do when I look at initiating a put option trade. And it's important because we want to be selling put options below key support levels. So really this is something you just kind of do by eye. It's more of an art than a science. And if you see that price is bouncing off a certain level, in this case Western Digital has been bouncing off the 82.50 level, that would be a key support area. And then it's bounced off this $90 level several times and gone back down, and that would be a resistance area. So what you want to do is map that out. And then the other thing that we talked about is we want to sell put options on stocks or ETFs that are in an uptrend. And that's important because this is a bullish option strategy, and we want to make sure that we're trading stocks that are in a strong uptrend. So you can see that Western Digital Corporation has been in an uptrend since January 2014 on this chart. And then in September and early October, we had a strong pullback. And you can see that it pulled back right to the support level that we had previously mapped out at the $82.50 level. So these support levels are quite reliable. And since we've gotten a pullback and then a bounce off of the support level, this area right here would be a great opportunity to initiate a put option trade. And what we want to do is we want to sell put options at a strike price below this key support level of 82.50. So we're going to go over to our Thinkorswim options platform. Let's actually go back to the chart here real quick. This happened, this bounce happened on the 16th of October. So one thing we can do with this Thinkorswim platform is we can backtest trade. So we're going to go back to the 16th of October 2014, and Western Digital was trading at 85.58 per share at that date. And remember, we want to sell about 30 to 60 days out in time to expiration. So here is an option that expires 36 days from the 16th of October 2014. It's the November monthly option. So we're going to pull this expiration date up. And remember, again, looking at our chart, we want to sell below the $82.50 support, $82.50 support level. So let's take a look at our strike prices here. If we look at the $80 level, that's $2.50 below that support level. That would give us a pretty good margin of error. But remember, if we can, we want to sell at least with a 75% chance of the option expiring out of the money. So if we go down a little bit further to the 77.50 strike price, we can see we have a 75.89% chance of this option expiring out of the money. So that looks like a good option to sell. So let's go ahead and do that and see what happens. We're going to sell the 77.50 strike put options that expire in November 2014, and let's sell 5 contracts. So we're going to change that to 5. So we've got 5 contracts of the 77.50 strike price, and we're selling those for $1.34 per contract. Remember, those represent 100 shares of the underlying stock, so we're receiving $134 per contract. We're selling 5 of those, so we're going to get over $600 in income deposited into our brokerage account when we execute this trade. Now again, our goal in this initial trade is for Western Digital Corporation to finish above the $77.50 strike price at expiration. So let's fast forward here to November. And these options expire the 3rd week of November, so that's November 21st, 2014. And if we fast forward to that date, there you have it. So our options expired worthless. We can see if we go back to our chart here on that date in November, we're way above our strike price, which is great. You can see Western Digital actually rallied quite strongly there in the later part of November, or October and the early part of November. So this trade worked out great, and you can see our profit loss here of $635, so that's after brokerage commissions. We get to keep the entire premium that was deposited in our brokerage account, so we achieved our goal on that trade. Now they're not all going to work out that way, so there was a 75.89% chance that was going to work out. So in the 25% of the time where that wouldn't have worked out, we're going to need to make trade adjustments to get to our 97% win rate. And that's key. So we're going to go over 3 different ways to adjust trades if they move against us. So if this trade is closed below the 77.50 strike price at expiration, we need to make an adjustment so that we don't come out, as a loser on that trade. And it really is possible to get up to the 97% win rate using these adjustments that I'm going to teach you later in the course. Now, the last thing that I didn't mention here in this trade example is implied volatility. So implied volatility is one of the major contributing factors to an option's price, to the premium that we get when we sell the option. That and the time remaining to expiration. So that's one thing that I look at when I initiate a trade also is typically the rule of thumb, you want to sell put options when implied volatility is high. And most charting platforms offer this. If you aren't able to find it, you may want to contact your broker and figure out how to determine the historical implied volatility. But you can see if we go back to October, I'm sorry, I don't have Western Digital pulled up. 1 second here. If we go back to October 2014 on Western Digital, so this is where we initiated our trade on the 16th. And you can see this is the implied volatility down at the bottom of this chart. And it's spiked. It's way high compared to what it's been in the past. So this really it turned out to be a really great area to sell a put option for income. So that's kind of how the strategy works in a nutshell. But again, there are times when this trade won't work out as we've just demonstrated. So that's when you're going to have to make your trade adjustments, and we're going to go into that in the modules to come.